You will remember our next guest, David Goldman. He is an author and economist. His book, How Civilizations Die, is a fascinating study in, well, the will to live and a nation's quest for immortality. I point out the subtitle, and why Islam is dying too, a very controversial subject. We talked to him about that before, but today we brought him back for a special two-part interview, well, about our civilization. First about Europe, and then we'll talk about North America after the break. Welcome back to the show, Mr. Goldman. Appreciate you making the time.
Oh, honor to be here. Thank you.
Now, last time we spoke, we talked about the difference between the strong economies of Europe, the Germanys, if you will, and the weaker economies like Greece that were, really trying to force these two kinds of economies into one, and why that wasn't working. Since we last spoke, things have gotten, well, from crisis to extreme crisis mode. Is Europe as an economic entity, is the euro as a currency, is it as good as dead?
I think a rump of the euro can be saved, including France, Germany, Belgium, and a few others. But Europe as the expanded 27-member bloc surely is dead. We were told for years that Europe was a welfare paradise run by enlightened elites who knew how to do things, as opposed to us dumb, populist, Yahoo American capitalists. And what we find out is that the euro provided cover for the biggest scams and Ponzi schemes that have ever bankrupted major national economies in recorded history, Spain and Greece being the extreme cases.
Now, tell me how that would have worked.
Spain is unsalvageable.
How did that work? How, under the cover of the euro and the European Union, what was the scam? How was the wealth transferred?
Well, the Spanish banks sold about $1 trillion worth of their bonds. Effectively, the equivalent of a year's GDP of Spain was issued in the form of Spanish bank debt. The Spanish banks used that money mainly to fund construction loans on the come, figuring that the dumb tourists from England and elsewhere would be buying Spanish seaside real estate indefinitely, to the point that the Spanish real estate bubble, by my estimate, is 3 times as bad as the American subprime bubble at its worst.
So they're not just building stuff, but they were subsidizing like crazy solar power, wind power. There was no fashionable economic scheme that they didn't buy into with both fists.
Oh, well, absolutely. But the bottom line of it is that they admit to bad loans at 1/5 of GDP. My estimate is they're at least twice as bad, close to half of GDP. We're talking about America's subprime crisis on steroids, and the first national banking system, which is completely bust. And since it was all the Spanish pension funds and insurance companies that financed the banking system, plus a lot of foreign banks, the knock-on effect is, if you wipe this paper out, the Spaniards are going to probably have to cut their pensions in half. The Spanish people are going to be impoverished.
Impoverished? Do you think you'll see Greek-style rioting? Do you think you're going to see the trouble in the streets?
I think the Spanish are still fighting their civil war of 1936 to 1939. Politics there are very bitter, and I think we'll see social turmoil. The real danger is that as the Spanish bankruptcy finally winds down, it will threaten the solvency of the French and the German banks. And my view is Germany and France have got to worry about bailing themselves out and containing the effect of the Spanish crisis at the level of their banks. Spain is simply too big to be bailed out. But given European politics, everyone is still going through long and weary dances about what kind of bailout might be possible based on what kind of political conditionality. I think it's all nonsense. And because the Europeans are doing such a poor job of handling the crisis, we're going to have very unstable markets for some months to come.
All right, now help me out. What would the day Europe fails looks like? So the day that Spain needs to be refinanced and they can't come up with new suckers to invest good money after bad, what would that look like hour by hour for the first day or so? How would the dominoes fall? What announcements would there be? What would it be like in terms of pensioners being told sorry, in terms of people walking away from the homes and just handing the keys back to the bank? How would that affect banks? Like, tell me what that would look like to us sitting here in North America.
Well, the worst case is that there is a run on the banks shut their doors, people can't draw money out, the economy completely shuts down, and you have chaos. That's not likely because it's easy to prevent. Another possibility is Spain withdraws from the euro, announces they're back on the peseta, and they start printing money. Their currency, the new peseta, falls in relative terms by 60 or 70 or 80% against the euro. So everyone who holds Spanish government debt suddenly has bonds that are devalued by 60 or 70 or 80%. And the government in power uses the printing presses to give Spaniards what looked like pensions and what looked like insurance policy payouts, but they're worth a fraction of what they were supposed to have been worth.
So basically giving everyone a haircut, cutting everyone's pay, but pretending they're not by giving them monopoly money. And sorry, I interrupted you. You were saying there's one more scenario. What was that?
Another way to do it is for the Spanish to say, look, we are bankrupt. We're wiping out the debt. Pension funds are going to have to cut back. Insurance companies are going to have to cut back. People will get less. Then you go to, I don't know, the Canadian banks, the Chinese, to an Arab sovereign wealth fund, to somebody with fresh cash, and you say, our banking system is for sale with a clean slate. We've wiped out the debt. You can buy it, put new money in, and start it operating again. That would be the sensible thing to do. Politicians don't like that because it means they don't get to run the vigorish, they don't get to run the scams if foreigners run the banking system, but that would be the logical way to do it.
I read an article by an economist in the UK, Ambrose Evans Pritchard, who said that this problem is not just a bunch of dominoes in Europe about to fall, but that this global double-dip recession is starting to take root even in places like India and China, places that we always thought would power the world economy to success. Is it possible that this contagion can break out of Europe and affect us here in America? Is there a slowdown around the world that we should be worried about too?
It's possible, but I think it's easy to get overwrought. We've got very different kinds of problems. The Chinese are probably going from 11% growth to 7% growth. That's not a hard landing. That's not even a landing. That's just fast growth as opposed to insanely fast growth. The Chinese have a lot of costs they have neglected to keep up with. They've got to raise wages. They've got to cover environmental costs. They have to do a lot of things. They have to build infrastructure. They have to deal with backwardness in their rural areas. So the cost of that economy, the overhead, is going to keep them growing slower, but they haven't stopped growing. India has major problems, the lack of infrastructure, political inefficiency, and corruption. So they may be growing at 4 or 5% instead of the 8% people figured on. All that means is they're not going to grow fast enough to give us a big boost, but that's not a downturn. Big problem in the U.S. is extremely simple. One word: investment. We don't have it. The problem in the U.S. economy is that for the first time ever in a so-called recovery, we actually had a decline in non-residential investment during the first quarter from the previous quarter. Never happened before in any so-called recovery. There is an investor's strike going on, and you can come up with your own reasons for why this is happening, but I think there's a one-word answer to why there's an investor's strike, and that one word is Obama. Now, this is an administration which is business hostile. Investors are sitting on their hands.
Is it just his hostility to the earners, the 1%ers, his threats for having taxes on the wealthiest? Or is it not just rhetorical, but worries about how new regulations might come into healthcare, about the sustainability of the government debt? Is it a stylistic and a political adversity to Obama, or are they just genuinely worried, investors, about putting money into an economy that he's wrecking?
Oh, Obamacare is a disaster. It's killing hiring. It was the worst idea in a weak economy, even if you think that socialized medicine or public health care is the right way to go. Putting on an expensive new entitlement during the most fragile and weak recovery in post-war history was a really stupid idea, and I think Obama will lose the presidential election as a result. And I think getting rid of Obama, rolling back regulation, and establishing lower tax rates, a better regulatory environment, will lead to a pickup in investment and an improvement in growth. Maybe not the 7% growth that Ronald Reagan got in the first year when his tax cuts went into effect, but substantially better than we have now. So I think the result will be Mitt Romney's president, and next year we'll have not 2% growth, but 4% growth.
Now, you sound optimistic, you sound hopeful. What are you observing that causes you to think Mitt Romney's going to win? Was the Wisconsin election result last night, did that inform your views? Is it just Romney as a candidate? Is it the economic situation in general? Why do you think Republicans are going to win it?
Because 1 out of 5 Americans ready and able to work in working age doesn't have a job for whatever reason. Forget the 8.2% unemployment rate. Effective unemployment's closer to 20%. And the value of people's houses has been crushed. People's savings have been reduced. Americans are having a miserable time. Obama's done nothing, least of all for his core constituency. So I just don't see the American people returning a president who's done such an absolutely dreadful job of economic management in a year where the economy is the top issue.
Now, let me ask you this. I see oil prices have come down about $20 a barrel over the last few months. Now, in some ways, that's a tremendous boost to the economy. It makes the cost of everything fall, more than juicing interest rates or government stimulus. But what does that say about, traders of that commodities' predictions about economic activity? Do you think the decline in oil prices is a healthy sign? Or is it an ominous sign that will have positive effects on the economy? Or am I just wrong all around?
Well, no, I think that's exactly the right question. And the simple answer is that there's a nearly one-for-one tracking between the big stock market averages and the oil price. Economic expectations, growth expectations, and the price of oil are trading exactly the same way. So the fact that the oil price has dropped is like saying, isn't it great? I've got cancer, so I'm going to lose weight. I don't have to go on a diet. It's a sign of economic weakness. We don't produce enough oil, partly because the Obama administration and similar thinkers have made it more difficult for us to drill for oil in and around the continent of North America. So whenever economic growth goes up, the oil price goes up quite a great deal. Remember, back in 2008, it got to $140 a barrel because we had high economic growth. So a low oil price is a gauge of poor growth expectations. By itself, I guess it's better to have cheap oil than expensive oil, but it's cheap for bad reasons.
David Goldman, we've got to end it there. Thank you so much for bringing your wisdom and insight as you do from time to time. I look forward to talking to you again.
Thanks for your kind words.
All right, bye-bye.
Thanks so much.